5 boomer bust plays that could make you rich and make your portfolio soar to the heavens. In this video, we're going to be talking about 5 AI stocks. We're going to be talking about some robotics. We're going to be talking about some data centers, and we're going to be talking about some drone companies that I believe, these are speculative plays, but I believe that could 10, 20, or 30x in the next 5 to 10 years and give you massive gains. Now, do me a favor before we get into anything. These videos take a long time to make, guys. Please, I'm begging you, smash that like button, hit the subscribe, turn on notifications so you never miss a video from your boy RonnieV ever again. Thank you. And if you stick around to the end of the video, I'll throw in a bonus speculative play that also has massive upside. So let's get into it, guys. Number 1, we have Ondas Holdings, ticker symbol ONDS. This name is up 612% this year. Yes, I know. Ronnie, why are you talking to us about a name that's already up 612% this year? Well, I'm talking to you about it because it still has massive upside. This is a drone play. And if we dive in here to the AI with Seeking Alpha, we can see that they're headquartered in Boston, Massachusetts. They specialize in private wireless drone and automated data solutions. The company operates primarily through 2 segments, Ondas Networks and Ondas Autonomous Systems, OAS. Ondas Networks focuses on providing wireless connectivity solutions with its FullMax software-defined radio SDR platform. The platform is crucial for secure, reliable, and industrial-grade connectivity, serving sectors like rail, energy, mining, and public safety. This is the big one right here. Ondas Autonomous Systems offers drone-based solutions, delivering platforms such as Optimus System and Iron Drone Raider. These systems target defense, homeland security, and critical infrastructure markets, offering capabilities like autonomous aerial data capturing and counter drone operations. The company has made notable advancements, including achieving its first FAA type certification for an autonomous drone capable beyond visual line of sight operation without human presence on site. What do we know about recent bills that are being passed, and what do we know about the current administration? We know that they are very much so getting into, in a major way, the drone atmosphere. And we know that current things happening around the world, a lot of the fighting is being done by drones. So America and the politicians in charge in this administration, they are passing bills and spending a lot of money, putting a lot of money towards this sector. So we do have some competitors such as AeroVironment, and ARCAT. ARCAT's the big one, big competitor there. Valuation's not there, guys. The fundamentals aren't there. This is strictly a speculative play. This is a $1.6 billion market cap, but there is definitely room for a lot of different contracts with the government, a lot of different expansion into consumer markets if they choose to do so. They more primarily focus on Warzone side of things, but there is that ability to expand into the consumer side of things as well. 555% growth year over year, profits 0%. So they're not net income profitable. They're not cash flow positive, guys. This is strictly a growth beast that it's more of a buy into the story that drones are the future of warfare, and buy into that story and play this in that regards. Now, if I was you, I would not just be going and buying this thing. If we look at the chart here, I would not just be going and buying this thing willy-nilly. I would wait for pullbacks. It is quite a volatile name. I would wait for pullbacks or simply just dollar cost average. Dollar cost average as we go up, and as we come down, continue to dollar cost average into this name. My speculative positions, I don't hold more than 1 to 3% of my bigger portfolios, and more than 1 to 3% speculative in my bigger portfolios. So that's where all these names are going to go into my portfolio in the speculative pile. It gets divvied up into all these different spec plays. And really, I just need a couple to hit, right? Because basically, if I just get a couple to hit, that'll turn $1,000. If we 10x, that'll turn into $10,000, obviously, right? And if I put 1,000 into 10 different stocks, if I just hit 2, then I'm going to double my money. You see what I'm saying there? Because if we get 2 at 1K each and they both double, and we get 10K and 10K, right? And let's say the other 8 fail, which is crazy, like fail, like they just all go to 0. My stock picking's pretty good. So I don't think that's going to happen, but let's just say that happens. Well, then essentially I would walk out of there with 20K minus 8K lost. We'd be up right around 12,000 minus fees and all that good jazz. But you can see that if you kind of do a buckshot approach with some of these speculative plays, buckshot approach just means like you kind of widespread fire at a bunch of names that could be that are high risk, high reward, that could be something great. Awesome. They could work out. They could also not work out. I think this name could work out. I really like this name. All time highs are all the way up here at about $19.51. That's not how you should look at it, honestly. Just letting you know where the all time highs are and where this name's been before, where it IPO'd at. Basically, 4 times higher than where it is today. So I really like this name. I would just dollar cost average into this name as well as the other ones. We don't have to look at charts for every single one. So I would just say dollar cost average into all of these. Say I'm going to invest $1,000 into this name and divide it out by 6 months, 12 months, 18 months, whatever. Divide it out and do that every single month, every single week, whatever you choose to do. And just continue to dollar cost average until you get to your desired portfolio size for that specific name. Next up, number 2, Richtech Robotics. Yes, Richtech Robotics. This name is also up 110% this year. Not as much as Ondas, so that's good for us. And a lot of these names I am in, guys, a disclaimer. And again, a lot of these names are sub $2 billion market cap. So just please be careful. Again, these are speculative plays. These are very small positions I have in my portfolio. These aren't like the Metas and Googles of the world where they're super reliable. These are very small companies. Be careful. Richtech Robotics, a robotics technology company based in Las Vegas, Nevada, specializing in the development and deployment of robotics solutions for automation in the service industry. Incorporated in 2026, the company offers a range of products including server assistant robots like Matrity, Medbot for hospital deliveries, Titan for heavy-duty tasks, and Skylark for hotel services. Richtech also provides Dusty cleaning robots and Atom and Scorpion for food and beverage automation, complementing its Cloufie and Tea self-owned restaurant brand. Richtech's products serve diverse sectors such as restaurants, hotels, casinos, senior living facilities, and healthcare institutions. The company has embraced a robot as a service, RaaS, new concept here, RaaS model instead of SaaS model, subscription as service, robot as a service model, to provide a scalable and flexible approach to automation. Richtech's operations are supported by a global R&D team in the US and China, leveraging AI and cloud technology through the AI Cloud platform. The company is committed to integrating robotics into everyday life, offering business data-driven optimization tools that enhance operational efficiency and reduce labor dependency. Competitors are Bear Robotics, Pudu, that's a terrible name, Pudu Technology, Savioke Incorporated. The growth is massive. The valuation is not so great, guys. Again, these are speculative plays, and they actually are. NVIDIA is invested into this name. So that obviously holds a really good weighting in the realm of things, as NVIDIA is the king of AI. So having NVIDIA, this company is massive. And if we go over to visual stocks here, we will see that they're a very small $306 million company. $306 million company, guys. Very, 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 very tiny company here, but the opportunity is massive. Like I said, they're not net income, they're not free cash flow positive. Get used to that. A lot of these companies are not going to be on this list. These are very different companies that I typically talk about, where I'm sitting here screaming about how undervalued they are fundamentally based on my high five snapshot, so on and so forth. These don't fit the bill for any of that. And that's okay, because as investors, we don't just look for only undervalued companies. We want those hyper growth stocks in 1 to 3% of our portfolio that are boom or bust, right? We still want those in our portfolios. So, yeah, Richtech Robotics revenue is kind of stagnant over the last few quarters, but it is expected to, if we look over here at the estimates, it is expected to start rapidly growing as time goes on. As we can see here, estimates for EPS are supposed to continue to climb as well. And overall sentiment, analyst and earnings, basically analyst is bullish, new sentiment is meh, bearish. We move on to number 3, another robotics name, Serve Robotics. Only 23.61% up this year. Last 1 year, they're up 23.61%. We analyzed with AI here. Serve Robotics, headquartered in Redwood City, California, designs and develops low emission autonomous delivery robots. Founded in 2027, Serve Robotics originated as a project with Postmates and became a standalone entity following Uber Technologies Incorporated's acquisition of Postmates in 2020. The company specializes in sidewalk delivery robots operating primarily in the United States. Serve Robotics generates revenue by providing robotic delivery services primarily through partnerships with food delivery platforms like Uber Eats. So essentially, they're these little robots that drive on the sidewalk They go to the restaurant, they grab the food gets put in there, and then the robots drive on the sidewalk all the way to your house. They're really being used right now in cities. Obviously, this thing's not going to get on the highway and go 30 minutes to your house, right? They would go to McDonald's or whatever. They put the food in there, and then it takes it to your condo, the main door of your condo, the main door of your apartment, XYZ hotel. And there you go. Just grab it, and there you go. You don't have to pay anybody. You just pay this robot and the service. And I believe these are going to really expand and be in every single major city across the United States. And they can obviously expand in the world and get to this massive growth. Yeah, they can really get to this massive growth, guys, across the entire world. And I believe that it's mainly going to be one of those city specific inventions. The company's third generation robots are engineered to enhance delivery efficiency, carrying more goods and traveling longer distances on a single charge. These robots are equipped with advanced safety features, including autonomous collision avoidance and emergency braking systems. Serve Robotics plans to deploy 2,000 robots by the end of 2025 to expand and presence across multiple U.S. markets and internationally. Look at that, they're already expanding internationally. The company's operations are supported by a strong focus on AI and autonomy, aiming to offer cost-effective alternative to human couriers. Serve strategic partners, including collaboration with Uber and the enterprises, play a crucial role in its growth and operation strategy. So they could replace mailmen, they can replace Uber drivers, Lyft drivers, anybody who's doing food delivery, grocery delivery. They can replace all of it, right? They can make bigger ones. $663 million market cap. This could definitely turn into a massive player, obviously, and it could turn into a massive player. Lo and behold, the net income is very negative. The net free cash flow is very negative. 33% revenue growth year over year, 310% revenue growth over the last 3 years, which is massive. And we see revenue had a big spike in Q1, flattened out, and now is reaccelerating. And we can see that this past in 2024, we had a massive jump from basically $20,000 all the way up to $1.8 million. So very small company, speculative. I've made that very clear, but the growth is projected to be massive, massive, massive. Okay. And as we continue on, we can find that number 4. And again, I'm going to give you guys a bonus stock at the end of this video. So stick around to the end of that. And also do me a favor, hit that like button, hit the subscribe, guys. I'm dropping content like this all the time. 149% move, EOS Energy Enterprises. This company is a Goliath, and I think is going to be a massive player in batteries. Batteries are going to become a huge thing that's very needed for all of these robots, all of this technology that we're continuing to advance into as time goes on. Batteries are going to be very, very needed to keep things charged. So this is the play for that. A $1.93 billion market cap. EOS Energy, ticker symbol EOSE Enterprises, headquartered in Edison, New Jersey, is an American company renowned for its innovative zinc-based battery energy storage systems, BESS. Established as a distinct entity through a merger in 2020, EOS develops, manufactures, and markets energy storage solutions primarily in the United States. The company and core technology, the Zinth battery, is tailored to utility-scale, microgrid, and commercial applications, offering an alternative to traditional lithium-ion batteries. EOS Z3 battery module is designed to manage increased grid complexity and price volatility, providing solutions for 3 to 12-hour discharge duration applications. The company emphasizes safety and sustainability, with the products being non-flammable. That's massive. Primarily sourced and manufactured in the EOS, which is good, no tariffs. EOS operates primarily in North America with a manufacturing facility in Turtle Creek, Pennsylvania. The company serves various sectors, including utility-scale renewable developers and industrial companies. Positioning its technology as a key component in the shift towards sustainable energy solutions, EOS continues to leverage its extensive patient portfolio and research and development capabilities to enhance its products offerings and maintain its competitive edge in the evolving energy storage market. Big competitor in Tesla, Fluence Energy, and ESS. Obviously, the biggest competitor right there is Tesla. We have a C for valuation, so we're getting a little bit better. A for growth, so that's good. We come on over here and look at the earnings and the projections here. Expected to get to net income. This is analyst estimates. Expected to get to net income positive by 2027, $1.33. That'd be massive growth. And then expected to have 872% revenue growth this year, 230% next year, and 104% revenue growth in 2027, achieving $1 billion in revenue in 2027. Remember, this is a sub $2 billion market cap. So getting to $1 billion in revenue, pretty solid. They are just a sub $2 billion market cap right now. with massive growth in a company that's very well needed as batteries are going to continue to be needed more and more. 1,597% revenue growth, profit improvement, amazing. Product revenue is expanding rapidly, service revenue expanding rapidly, especially this last quarter. My goodness. Commercial pipeline is on a nice hockey stick curve up. Revenue is just exploding this past quarter. They've had two net income positive quarters. I like to see that. That means they're getting there, trying, right? Getting closer, trying to get things figured out on the net income side. Free cash flow is still just, a cash burn right now. This is again a speculative company. Estimates are expecting just absolutely phenomenal growth, explosive growth over the next 4 quarters. For the next year, 2 years, expected to go from 2025 to 2026, a massive almost 4x in EPS, continue to climb towards profitability. And this is just another company. If we look at the chart, they're well off their lows of $1. They're all the way up here, breaking out of a cup and handle pattern, about almost $7 per share, with a large move up to $10, $12.62, and a ton of room up here into the 20s as well. So again, this could be very, very big name if they continue to execute, which I do believe they will continue to execute in their vision and what they're trying to do with batteries. Number 5, again, we got a bonus for you guys here at the end of the video. Smash that like button if you love bonuses. Cipher Mining. Cipher Mining is up 112%. This was a funny name because I actually got into this name this past week. We got into it. We shared it live on X. And after we shared it live on X, we went from 3 to 4% up all the way to like 17% up on the day. Had an explosive move, guy. Not because I shared it, anything like that. I don't have a big enough account to be doing something like that, but more so just because people are comparing this name to Iren, which Iren had great earnings and they're getting into data centers. They're a Bitcoin mining company flipping over into data centers. And that's the same thing that Cipher Mining is doing, the same exact thing. They're the most relatable to Iren. I still love Iren more, and I still believe Iren is a great opportunity long term. It's not on the speculative list because I don't think it's really that speculative. I want more than 1 to 3% in Iren in my portfolios, which I do have. That's why it's not on this list. Cipher is more speculative because it's not Iren. It's not the new Iren. It's just like they're following that path of Bitcoin mining and going into data centers because they already have the capabilities in the room, and it could spell, big rewards, big revenue for them in this company, which is why I do believe this is a good company. On the speculative side, Cipher Mining, established in 2021, headquartered in New York City, is engaged in development and operations of industrial scale data centers, primarily for Bitcoin mining. But like I just said, they're getting into data centers for capabilities for AI. The company operates facilities in Texas, taking advantage of state's low electricity costs and business-friendly environment. Cipher Mining's operations include Odessa facility, which is the largest site capable of producing significant portion of its Bitcoin mining hash rate. Also, I think Bitcoin is going to continue to go higher and higher as years go on. So a company like this will also make money and revenue from Bitcoin mining as well. The company utilizes fixed price power agreements to maintain competitive electricity costs, which are crucial for its mining operations. In addition to Bitcoin mining, Cipher is expanding to capabilities to include high performance computing, HPC hosting, positioning itself strategically the intersection of cryptocurrency and AI infrastructure. What I tell you, the company's joint ventures and leasing agreements further support its growth ambitions in the rapidly evolving digital asset technologies sector. Competitors, Riot, Mara, Clean Spark, Iren, and a bunch of new guys too. If we look over here at the earnings, guys, and some projections, we see that we already have EPS positive. Love that. Already 33% EPS, 36% expected for this year, and then jumping out this 66%, 86% EPS growth into end of 2026, 81%, 56, and then 24% revenue growth expected by 12, 11, and 3 different analysts, getting up to $500,000 in revenue. I think these are low. I think these are low where AI is going, where AI infrastructure is going, where data centers are going. You have to realize that data centers are a real bottleneck for AI and AI infrastructure. A massive bottleneck, guys. Don't be surprised if Cipher is the next company to land a big deal with a big company and you see this thing just absolutely rip. Okay. Speculative name, but it has that capability. And I'm actually getting into a decent amount of these names. Again, buckshot approach. A little bit of money can go a long way in a lot of these different names because they can absolutely rip if one of them or the ones or multiple of them are the ones that get a big deal with like a Google or Meta or Amazon or any of the other multi-billion dollar, $100 billion companies. Okay. AMD partnership, NVIDIA partnership, sky's the limit here. They can get bought out for big money. You gotta realize it's a bottleneck. There's a lot of money to be made if you have the solution to the bottleneck. So that's why I really like a lot of these names and I'm getting into them. And if you didn't see it yet, I had a post on my X. Bring this over here. I had a post on my X. If you didn't follow me on X, it's at the RonnieV show right here. I believe these 6 names could be the next Iran. AI is exploding, but data centers are the massive bottleneck holding it back. That's why Bitcoin miners pivoting to AI, HPC, or gold mines. If Iran's rally is any sign, these could explode in AI demand surge. Look at this. Cipher Mining is number one. Core Scientific's number two. If you want to know the other four, go follow me on X. At the RonnieV show, go follow me on X. Go read all about it. 421 other people have read it. 665 other people have bookmarked it to read it later. And almost 100,000 people have seen this. Go check this out if you want to know what other companies you believe. And I believe, well, sorry, I believe, not you believe. You might believe it after you read it, that I believe that could be massive players in this bottleneck. Visual stocks, we see Bitcoin production, mining hash rate, we see revenue kind of just like up and down and up and down. But again, if they can expand and really do this thing with AI infrastructure, you're going to see a massive spike in revenue. Net income, they've proven to be able to get net income positive. They've proven to be able to get free cash flow positive. I would just like them to do it more consistently. But again, it's a speculative company. You got to be patient with these names. $3 billion market cap, massive upside. Number 6, your bonus. Before I get into the bonus, smash that like button if you haven't. Subscribe so you never miss a 5-minute breakdown of a stock that I love, a new gem, a deep dive, a earnings live stream, a technical analysis live stream, a due diligence live stream, retail weekly, whatever it is, we're doing it here on this channel. And I want you to be a part of that. So hit that like button, hit that subscribe, and never miss out again. Number 6, your bonus, Ouster Incorporated. Ouster Incorporated is also up 300% this year, but this company is also a leading player in robotics, AI, autonomy. Ouster is a leading provider of LiDAR sensors and solutions operating across automotive, industrial robotics, and smart infrastructure sectors. Headquartered in San Francisco, Ouster serves a global market spanning the Americas, Asia Pacific, Europe, and Middle East, and Africa. The company offers a range of high resolution scanning and solid state digital LiDAR sensors, including the Ouster sensor and digital flash, along with software solutions like Ouster Gemini and Blue City. These products enable 3D vision in various applications, enhancing safety and autonomy for vehicles, industrial machinery, and smart city infrastructure. Ouster's technology is built on patented digital LiDAR design that offer high performance at a lower cost, and the company collaborates with manufacturing partners Benchmark Electronics and Fabrinet to scale production. Ouster's strategic focus includes developing software to complement its sensors, aiming to drive adoption across its targeted markets. With a broad customer base and a strong emphasis on intellectual property, Ouster is positioned to capitalize on the growing demand for autonomous technologies. The company envisions a future where its LiDAR solutions become integral to various industries, promoting safety and efficiency in the physical world. That last sentence right there, this is a $1.65 billion company. We all know that autonomy is going to be historic, it's going to be life changing. We already know that. We're already starting to see that in today's day and age. For a $1.65 billion company, for this to say, the company envisions a future where its LiDAR solutions become an integral, which means like dang near and everything, to various industries, not just autonomous vehicles and cars, but autonomous serve robots, other robots, Optimus, whatever it may be. NVIDIA promoting safety, which is important, and efficiency in the physical world. Luminar, Innoviz, Ava are its competitors. If we come over here, we can see that they're expected to take a while to get net income positive. This is a growth beast. As we can see here, 30, 36, 42, 38, 31% revenue growth, going from 145 million to 510 million in the next 5 years, 4 or 5 years, basically. And again, for a company that is this small, it has a lot of room. 1.6 billion. Look at this revenue. This revenue is absolutely a hockey stick. They are going quarter over quarter over quarter over quarter over quarter growth. If they can continue to just run quarter over quarter, revenue growth, this name is going to continue to climb higher. Doesn't really matter if the net income isn't there, or the free cash flow isn't there. But by the way, their net income isn't that far off from being positive, and definitely their free cash flow has gotten a lot better here, as we can see. And they're very close from being free cash flow positive, which is great. They become free cash flow positive, and this becomes a fundamentally undervalued company. This will no longer be a speculative play for me. This will be a legitimate, maybe a gem for me in my gem portfolio and for the long term. And look at this, massive cash and bonds and barely any debt. Love to see it. Love to see it. Again, estimates on a yearly basis through 2027, going from 111 all the way up to 282 million. EPS expected to go break even or go positive. I said I gave you 5 boom or bust plays that could 10x or make you rich. I gave you 6. Hope you appreciated it, guys. Hope you enjoyed the video. Let me know if you want to see more videos like this. Let me know what other videos you want to see down in the comments below. And one last time, guys, smash that like button, hit the subscribe button. And if you want to be part of a collective that's all about trading and investing, where we truly teach, educate, try to get you to become a better investor and trader, your best self in the shortest amount of time, join the High Five Collective. The link will be in my bio below, guys. Appreciate you all. Have an amazing rest of your day.